Hi guys, happy new month. January is now finally behind us. At least we have January's range, and like I used to mention in some of my previous videos, January is generally not a time you want to be trading, okay? Because January is what sets the range for the year, okay? So January and December, they are like the Asia range and CBDR for the year. Okay, hope that is clear. So that is why personally I haven't started trading. Okay, so I'm waiting for the probability to be in my favor. Okay, before executing on my trades. But I'm hopeful that this week or the next I should begin to um take trades. Okay, so this is the weekly outlook video for Monday 6th to Friday 10th, 2023. Okay, so before I start with the outlook video, I'd like to show you something interesting, okay, that I'm going to teach at the end of the outlook video. If you are not interested in the outlook video, obviously you can skip to the end. Okay, if you take a look at this chart, if you look closely, you would see the boxes, these shaded boxes, this. Now, the shaded boxes are what I call TR candle. Okay, this is something I observed. Okay, it is not my creation in code. Okay, it is something I observed from my research. I realized that this is a strategy that even some traders have been using for many years, but it's not a popular strategy. Okay, so what I did was I adapted it, and for my back test, there were many things I realized and observed. I took note of them, and it's really astonishing and it's mind blowing to see what I observed after creating an indicator for it. Okay, so there are multiple TR candles intraday. Okay, there are about 6 TR candle intraday. Okay, and the general rule of a TR candle is that when price closes below it, the algo or IBDA will not allow price to go above it, okay, if in a sell program. Okay, just like we have here. Once it closes below it, it will not allow it close above it. Okay, when it closes below it, certain elements of the TR candle, let me zoom in, like the middle of the TR candle, the opening price, the close of the TR candle can give you a lot of indication as per what the algo is doing. Okay, so basically the general rule is that when a TR candle forms, okay, and price closes below it, it will not allow it close above it if the algo is in a sell program. Okay, if it closes above it, it will not allow a close below it. Okay, so you can use it as a trading setup. Okay, when price closes below, it should not allow a close above, so you can take a trade knowing fully well that your stop above here will be protected. You can see this here again, down, rally to the middle, rejected, close down below it, rally up, rejected, close above it, drop down, rally up. Okay, so I'm going to shed more light on this TR candle, okay, both on the daily and intraday. Okay, there is also monthly, there is also weekly and yearly TR candles. Okay, but I would only be covering the daily TR candle and the intraday TR candles, as well as a 5-minute TR candle, okay, at the end of this video. Okay, and in the course that I promised I would be making on algorithmic series, which is a free course, I would go into more details about other elements, other things, other macros that this is one of the macros. Okay, this is one of the macros. Okay, it's like a list of instructions that the algo has been programmed to follow. Okay, at different instances, when in a buy program, when in a sell program, when in a seek and destroy program. Okay, so without wasting much time, I'm going to start with the outlook video. So let's start with DXY on the monthly. Okay, DXY on the monthly time frame, we have this liquidity down here. That is sell side liquidity. The market is in a strong uptrend. Okay, and we have this buy side imbalance, sell side inefficiency. The market has dropped slightly into it for institutional order flow entry drew and reacted to it. Okay, this is a really strong reaction. Okay, now this is the whole of January range, this is the whole of December's range. So look at how dynamic this price action is. Okay, almost erased half of the entire price action that happened in January. Okay, so this is a very dynamic price action. Let's go to the weekly time frame. On the weekly, we have this imbalance, this sell side imbalance, buy side inefficiency. A monthly low was taken. Okay, this is a monthly low, this is a weekly low. 30th of May. Okay, so this is a monthly low. Price has dropped down, taking it, use it as liquidity and rallied up. Now, let me tell you, the easiest way you can know when a low was used as liquidity or there is a break of structure is if there is a close below it. If there was a close below this low, then this is going to be a break of structure of this low. But if it drops, sweeps it, but fails to close below it on the same time frame that that low forms, that is a liquidity sweep. Okay, generally you can use that as a rule of thumb. Okay, that is a liquidity sweep. All right. So we have this other block as well, and we have the consequent encroachment of this week. Okay, the low and the high of the week is going to be important, okay, because they are very sensitive areas. All right, so what am I? If you look at this candle, okay, the first question I ask myself when doing my analysis on the weekly time frame is: are we likely going to reject down, or are we likely going to rally up? Okay, from my now ask yourself, from this candle, is this candle likely going to reject and come back down? Is it likely going to run up? Okay, I would say it is more likely going to go up than come down. That is what I would expect. Okay, I would expect we have this um imbalance here as well. I would prefer that the imbalance is left behind as a breakaway gap, okay, for another time. Let's go to the daily time frame. Now, why do I think that it is likely not going to come back down because liquidity has been taken here. Okay, liquidity has been taken here. We've seen a dynamic move after that. So it has no business coming down here again. Does it? It shouldn't. It shouldn't come back down here again. Now, the way IBDA works is it gives interbank traders, the smart money market makers, gives them opportunities to pair their orders with opposing orders. That's pretty much how IBDA has been coded, okay, to make the market efficient for the interbank traders so that when price moves to a specific level, the algo is waiting and waiting and waiting for them to fill in their orders. So once they fill in their orders, that is when the algo begins to move. That is when you see all this dynamic price action. Okay, when the market makers are not in the market. Okay, now by market makers, I'm not referring to the dealers. Okay, I'm not referring to those that are providing liquidity. I'm referring to the real market makers. Okay, the smart money. Okay, that are not widely known, right? It waits for them. That's what the algo. When those guys are not in the market, the algo will enter into time distortion to be consolidating up and down, up and down, up and down. That is why typically some parts of December and January, that's why you see those kind of price action. And then some part of the summer months like July, August, when price will be held in a range is because they are not in the market. Okay, so the algo knows that they are yet to fill in their orders. Okay, when price returns to an order block, the algo is waiting for them to fill in their orders. Once the algo knows that okay, there's a lot of orders have been filled now, okay, then it knows that it's time for it to move. Okay, hope that is clear. Um so now that we've had a dynamic move from here, it doesn't need to come back up to take liquidity again. It doesn't. Okay, so let's go to the daily time frame. On the daily, we see that we have taken liquidity also below here, and we had this dynamic price action. Okay, so and this is a break of structure, break of intermediate time high. Okay, this is a break of an no, this is not intermediate, this is a short term high. Okay, this is a short term high, this is also a short term high. So on the daily, we've seen a break of a short term high, we left this gap. Preferably, I wouldn't want price to come back down to this area. Okay, wouldn't want price to come back down into this range. Why? Because this is now already a balanced price range. Why is it balanced? Because price has provided buy side, sell side multiple times throughout of this range. So when price breaks out of it, ideally, if the market is really bullish, it will not return back into the range. Okay, where is only likely going to return to is the high of the range and sometimes the equilibrium. Okay, this is the equilibrium of the range here. So I'm permitting that it could return here, but I would rather not see that because we have this down close candle other blocks. Okay, so the other block should hold price in my opinion. If we get a retracement to this level, it should hold price, but preferably I wouldn't want price to go below this level. Okay, so what I'm anticipating is a return to this volume imbalance, use it as support for another leg higher. Okay, that is my anticipation. Okay, we have this fair value gap here as well, that is also something to pay attention to, right? So this area may offer some resistance into this volume imbalance. Okay, and if we get a fair value gap today, okay, so does it drop down here from support to rally up, or does it go up first, find resistance here and then drop? I don't know. Maybe when we go to the low time frame, we'll get more insights about that. But in the meantime, these are the two levels I'm watching. This area here and this area here. Once it goes below this level, then it's likely reaching for the other block and or this volume imbalance as well as the equilibrium. Okay, but I'm favoring more expansion. I'm favoring the price. I think that this should be the next draw on liquidity. Okay, the relative equal highs we have here. We also have small relative. Okay, this one has been taken, but this relative equal highs. Okay, that is what I think is the intermediate term draw on liquidity. Okay, this is a short term draw which has been taken already. So this, in my opinion, is the um intermediate term draw on liquidity. Now, if it breaks this high, comes here and closes above it, that for me will confirm this as a long term low. Okay, that will confirm this as a long term low because this is an intermediate term high. Okay, this is an intermediate term high. So let's see. Okay, let's see. Let me go to the 4-hour time frame. On the 4-hour, we have this breaker. Okay, and you have the equilibrium of the range. We also have this down close candle. Okay, preferably I would want to see this down close candle hold price. The lowest I would anticipate that price can go is this tiny little fair value gap right here, but preferably I would like to even see that remain open. I would prefer that this other block holds price. Okay, now if we get a drop below here, then it is more likely going to drop to maybe somewhere around there or even take out this low. So if we come, if we start entering this range that is already, balanced, no need for it to come back. You can see the way the market opened and started to rally up. It doesn't need to come back down again. Okay, so this is the daily fair value gap I mentioned, which initially acted as a breakaway gap. The market is about closing that in now. So and we still have, it didn't completely fill it. Okay, on the left side we also have a breaker. Okay, we have a breaker here. Okay, so which is what I think is leading to this retracement down here. So if this can continue to the downside to this level, perhaps fill this tiny little fair value gap and for another leg higher. That is what I am anticipating. I might be wrong, but that is what I'm anticipating for the week. Okay, 1 hour time frame. Again, we have this breaker here. This is also a reclaimed block. Okay, this is a market maker buy model. All right, so the up close candle that they sold into would eventually be used for more accumulation. Okay, which is what happened here. You can see this whenever you see down close candle, think of accumulation. Okay, when you see down close candle, see it as accumulation. Okay, so they are accumulated here, price has rallied up, they accumulated here, they accumulated here, and now we are seeing another round of accumulation. So I believe that this is not a distribution. Okay, I'm convinced that this is likely not a distribution. So that is why I'm looking to see if price would form support around here. Like I said, it doesn't need to come here anymore. Though I'm permitting it to drop to the equilibrium, but preferably if the market is really bullish and you see a dynamic move like this that leaves all this breakaway gap, okay, it doesn't need to come back down to fill it because this entire range has been balanced already. All right, so a drop down here and a rally to the upside to fill the rest of the daily fair value gap into this daily OB, and then we'll watch to see what happens from there. Yeah, 15 minutes.
So on the 15-minute time frame, we have what looks like a market maker sell model to take out this blow and perhaps use this down series of down close candle as support. Okay, so that's my expectation. I want to see price drop down either to sweep this level or find some kind of support around here on the other block for another leg higher into this area. Then from this area, I will watch to see what develops from there. All right. So this is bearish. Obviously, you can see how price has respected this area. Okay. So 5 minutes is anything of interest. This is also the CR candle on DXY. Okay. It works on all asset class. Okay. So up close, fail to go below it. 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 Down close, fail to go above it. So this can be used as the directional bias for the day or for the session. Okay, so if you are not sure of what the bias is and you have your range, just wait for price to close above it and wait for it to return back into any of the discounts arrays inside of the TR candle, like the opening price, which is this green line, the middle of the TR candle, which is this black line, the body, okay, like this dotted line, that is the body, the lower body of the TR candle, which is this dotted line. So those are the areas that would provide reactions. Okay, so that said, on the 5 minutes, now this looks much more cleaner. Looks like we have a market maker buy model and we have a market maker sell model and the market maker buy model unfolding. So the second leg of this move up is what I think is playing out now. And we are also it's also looking like a buy model. Okay, so initial consolidation, then smart money reversal to take out this high. Okay, so I'm watching to see what develops today. Perhaps I might be able to execute some trades and I'll post them on the Telegram channel. If I see a trade setup that I like, that I want to take, I'll post it on the Telegram channel. All right, so that's that on DXY. So I'm looking for more bullishness on DXY. Let's go to Euro. On Euro, let's start from the weekly time frame. We have this down close candle, which is going to act as support. We have this weekly fair value gap as well here. On the daily, we have a daily down close candle. That's a bullish order block. We have a breaker here as well. This is a breaker. I think I should add this as a breaker. So we have a breaker here as well, and the market has traded into the breaker. Okay, has traded into the breaker and looks like we're having a reaction from it. So so while I'm anticipating a retracement on DXY, perhaps this can rally up into this volume imbalance. Okay, and this is also a breaker, is a down close candle before this liquidity was taken. So that's a breaker. So perhaps we get a move from this breaker into this other breaker for downside continuation. Okay, so I am bearish on Euro. I think that there is a good chance that the high of the year might be in or let's say the first quarter, the high of the first quarter of the year is in, because price rallied up. We had a three drive, okay, 1, 2, 3. So we have three drive pattern, and then we had a breakdown. Okay, so this is a break of structure. This is a market structure shift, leaving behind the fair value gap. Okay, so I'm anticipating that this fair value gap would be used as a breakaway gap. I want to see it remain open, preferably. It's my feeling, but I'd rather see it remain open and then price just tap into this volume imbalance and continue to the downside. Okay, so let's see the 4-hour time frame. On the 4-hour, we have an equal lows here on the 1 hour. That 4-hour that has been, oh sorry, on the 1 hour, if we go to the 1 hour time frame, there's an equal low here that price has taken. We have a 4-hour fair value gap. Looks like we're seeing a reaction from it. Okay, so what I want to see is price moving up to this volume imbalance and then tumbling down to 1.06204 to this area, probably even lower. Okay, but I think there is a good chance that we get a reaction from this breaker. So this is a low, this is a high, this is a lower low, and then higher high. So this is a breaker. So if price gets here, we might get a reaction from here. We might. Okay, but probably I would like to see it just continue to the downside. All right, this is a market maker sell model. Okay, this is a sell model that has just been complete. This is initial consolidation. Now, if you filter out this time distortion, this consolidation we have here, you assume that they are not there. Okay, the market maker sell model becomes much more cleaner. The consolidation runs to an area of resistance and then forms a key high and then smart money reversal. So low risk sell right here, and then I'm anticipating another level of distribution here. Okay, so 1 hour time frame, on the 1 hour time frame, price has reacted to this. We are still bearish. Obviously, we are bearish, and when bearish, you would expect that bullish PDRAs, I mean, yes, bullish PDRAs will give price, while Tremor PDRAs would reject price. Okay, so this is a breaker and a reclaimed block. Okay, this was initially used for accumulation, down close candle accumulation, and I believe if market should find its way to this area, you would see distribution. Okay, so but the area I'm watching first is the 4-hour OB as well as the volume imbalance. The market has closed below it, so if you get a return to it, it should act as resistance. If the market is going to be bullish, perhaps to take out the equal highs here and above, then it needs to flip this volume imbalance into support to move higher. Okay, so the volume imbalance is really what the volume imbalance and the 4-hour OB is what I'm watching. But in the meantime, what I would rather like to see is a run to this volume imbalance and then rejection to this level. Okay, that is what I would like to see. I would like to see another leg to the downside. Now, if I am wrong, what it will do is turn this into support to clean the equal high. Okay, to clean all the equal highs here. Okay, but I don't see that happening. Okay, I don't see that happening, and I would rather not even see that happen, but it's a possibility. Okay, but this is what I will be anticipating. I'm looking to look for shorts around here, around this volume imbalance 4-hour OB. That is my intention. Okay, perhaps my sweep this area. Okay, but it should not close above it. Okay, it can sweep this. Let me show you. I think I should be able to see it. Yes, on the 15-minute time frame, we have these clean highs here. Okay, and we know that the market does not like clean highs, right? So I'm anticipating that we get a run up to this area. Okay, and then it will likely clean it. Okay, perhaps a drive into this area, clean out this before high. Maybe not that deep, but I'm going to be watching what develops. Okay, I'm going to be watching what for a short setup around here. From once price enters into volume imbalance and this high is taken, I'll start watching for a short setup, and my minimum target will be this level 1.06204. Okay, so that's my expectation for the week on DX on EU. So yeah, we have a market maker buy model, with this being the initial consolidation, run away, retest, forms a key low smart money reversal, low risk buy. So I expect that it should turn this right here into support. Okay, so a long can be framed on this. A long can be framed on this. You can frame a long on this. Okay, this area, this level should hold price if it is bullish. Okay, this level should hold price. All right, so maybe when the market opens and we get a Judas swing to the downside, small Judas swing to the downside for a move into this high. I think that is a scenario that I would like to see, especially now that we have broken structure. We've taken liquidity and broken structure above this high. Now this, okay, this is not liquidity. Okay, this is a break of structure. So um and especially considering that we now have a TR candle, the price has closed above. So ideally, it should not close below it. Okay, it should not close below it. So that's that. That's what I'm anticipating for the week on Euro USD. Last week analysis played out to the tick. Okay, it's played out almost exactly as I outlined it. The whole of this move I outlined it beforehand from my outlook video last week, okay, on EU. Okay, right from Monday, I was this run up, I anticipated it, this drop down, I anticipated it, this rally, and this drop. That was pretty much exactly what I outlined in the outlook video last week. So I'm curious to see what happens this week. So like I said, I'm really curious to see what happens on how EU plays out for this week. Okay, this move is also to some extent looking like a market maker buy model. Okay, so this entire move here is looking like a market maker buy model, but I don't trust. I don't. I'm leaning until price turns this volume imbalance into support. That is when I can then anticipate this. Okay, so let me show you the last week price action. Okay, and something to learn from that price action. Okay, so this was my analysis on Euro USD last week. Use a 15-minute time frame. Okay, so this was my analysis on Euro USD last week. You can see that that was exactly what played out. Okay, That was pretty much what played out. Okay. So, but the all of this move, I made very little money from it, despite outlining it beforehand. Because the level I was watching, price overshoot it, and I felt like it's like this is going to continue to the upside. So I was scared to load in on my short. I want to take some swing trades that I'm going to hold for pretty much a long time. And I missed on that opportunity because I felt the rally was so strong and market is going to continue to the upside. I never saw this as a liquidity sweep because personally, when the sweep is more than 50 pips, I mean 35 pips, I typically see it as a break of structure. So I felt like this is going to continue to the upside, and eventually you can see the breakdown on DXY. Okay, so something to learn, particularly when there is a high impact news event, price doesn't respect all these levels. When there is a high impact news event, same thing happened on DXY. The levels I was expecting to hold as resistance did not hold. Okay, so when there is a high impact news event, particularly FOMC and non-farm payroll, price does not respect structure. It doesn't respect PDRAs. It still uses them, but okay, PDRAs that you expect to hold are likely not going to hold. Okay, so that's what to learn. I could have just waited for the dust to settle and look for an entry trigger. All right. So that is that. Should we take a look at GU? Okay, so let's take a look at GU price action. So this is GU. GU has been really crazy. Okay, it has been, we have a market maker, potential market maker buy model, but I don't know if this is going to play out because it looks extremely weak. And perhaps it will, okay? Perhaps it will play out. If you get a break of structure here, I'll be leaning more to the upside on GU. Okay, I'll be looking to see if it will be willing to clean out these highs. I don't like seeing relative equal highs like this. Let's go to the weekly time frame so that so like I used to say, when I'm looking at the weekly candle, the first thing I ask myself is that is this candle likely going to expand to the upside or is it more likely to expand to the downside? Okay, we can see from here that, in my opinion, I think it is more likely going to expand to the downside. Okay, because we have a fair value gap here, fair value gap here. None of the fair value gap held. None. Okay, we still have this other block, and it has also closed below the mean threshold of the other block. The last PDRA here is the rejection block. Okay, is a rejection block which might lend a little bit of support, okay, into this level before it tumbles back down. Let me mark this as a potential BPR. BPR is balanced price range, and this as the low of the BPR. Um, Let me just use this. So if we go to the daily time frame, we have this volume imbalance that formed yesterday. So if it turns into support, perhaps it might be able to run a bit higher, but ideally, I would rather want to see this. This and instead use this. Okay, PRI. Mm, okay. All right. So that weekly fair value gap, this is a low. Somewhere around here is a low. I will have this daily as well. So ideally, okay, that area is already balanced on the weekly. Okay, so it might just provide. Now let me quickly explain something to you about balanced price ranges. Now, a range in price is balanced when price has delivered to it and provided buy side and sell side. Okay, so here buy side was provided, sell side was provided. So for it to balance now, buy side needs to be provided. Okay, when there is a fair value gap, price drops into it. That is repricing or redelivery. When you provide buy side and sell side, that is then balanced. Okay, so it is not yet balanced yet until price returns back and moves away from it. Okay, so on the this BPR, I'm anticipating that the weekly, but it has closed below, so I'm anticipating that that weekly fair value gap will hold as support to this level, as resistance to this level. So I'm anticipating a rejection around here to this level. Okay, what would invalidate my bias is if it rallies up and turns this fair value gap into support. Okay, because you have an order block here, so you might get, this is initial consolidation. Price has created a breakaway gap. I would like to see that open, preferably maybe institutional order flow entry due to tumble down to clean all these lows and return into this level. Okay, 1 hour. Okay, so if GU should break this high and turn this into support, then it will likely come back to this area. I'm watching to see how it reacts to the yearly open. Okay, I'm really curious to see how it reacts to the yearly open. Okay, but no, it's best to just stay clear of this pair. It has been in a seek and destroy program, just consolidating. You can see yesterday, this guy was stuck in consolidation while EU was dropping. When EU was going up, it was stuck in consolidation. I mean, just, it's best to just stay out of this pair for now until the price action returns to normal. 15 minutes time frame, you can see seek and destroy. You can see seek and destroy price action. See that? So maybe it's likely now going to run up to this area and then drop down. Maybe, I don't know. Let's see. But that's what I'm anticipating. I'm anticipating a move into this area and then rejection downward. What I'll be wrong is if we get a daily close or maybe 4 hour close above this imbalance. Okay, we have liquidity here as well. Well, let's see what happens. Where is the weekly PPR? This is a low. Okay, this is a low. This is a high of the weekly BPR that I marked out. So this is a level where I'm looking to see if a short setup can develop, but GU is a crazy pair. It has been crazy the past few weeks. So I'm just staying clear of it, but that is my anticipation in terms of analysis. Let's say 5 minutes. Look at the price action too. Despite being in a seek and destroy program, see how the TR candles have been holding price. TTL closed above it, came, rally, took out a high, closed below it, rally obviously this one failed, so that makes this high a draw on liquidity. Okay, when price closes below a TR candle and closes above it, that is how you know that it is in a seek and destroy program. Okay, some of the seek and destroy price action that I was able to anticipate and outline ahead of time in some of my previous outlook video, this is what I was looking at. Okay, when there is a TR candle and price closes below it and closes above it, the low of the TR candle first and foremost becomes a draw on liquidity. Okay, the low of the TR candle and or the lowest low it forms before it invalidated the TR candle becomes a draw on liquidity, like you have seen here. Okay, so and likewise this TR, okay, didn't close above it. Okay, you can see formed rally up, failed to close above it, dropped it down. Okay, so this is a setup in itself that can allow you to use very tight stop loss when the TR candle has formed and it is still going up, going up, going up, going up. When it gets to this area, okay, you can enter, place your stop here. Obviously, here you might have been stopped out, but once you get stopped out, you can enter again and use a tight stop loss. You can see from here the TR candle close above you, return to the middle. See how price was respecting the middle of the TR candle here. Look at that dynamic price action. Look at this price action there. Look at the body. Look at how it kept rejecting, pushing it to the upside. Okay, so um, I'm going to go a bit more. I'm going to go into more details in future videos on the TR candle, but as I promised on the Telegram chat, let me quickly do a crash course on how to use the TR candle. Okay, so that's that for my analysis. I will not be covering BTC. I will not be covering US 500 or US 100, okay, because I don't want the videos to be long. All right, so the TR candle is formed within a price range. Okay, let's start from the daily TR candle, which is easily visualized on the 4-hour time frame. Okay, these are indicators that I created, yet to be published, but I'll publish it eventually. So this is the daily TR candle. Okay, where there is daily, there is weekly, there is monthly, there is yearly TR candle. Okay, so but I'm only going to be covering the daily TR candle and the intraday TR candle as well as the micro TR candle, 5-minute TR candle in this video. Okay, so when the range in price for the daily TR candle is Sunday 5 p.m. New York time, 5 p.m. New York time to 4:59 New York time on Monday. Okay, I hope that is clear. The range that you are working with for the daily TR candle is Sunday 5 p.m. New York time to Monday 4:59 p.m. New York time. Okay, so that range in price, when you draw a box around it, okay, I've created an indicator that does it automatically for me, but you can also do this manually. Just draw a box. Once price closes above the TR candle, the algo will not allow a close below it. You can see from here, this candle closed above it. Market came down during a high impact news event and reversed just before getting to the low. Okay, so that is the TR candle. You can also see from here, price rallied, closed above it, came back to use it. Look at the body of the candle. The body is a dashed line on this indicator. The green line is the opening price, and the red line is the middle of the TR candle. The dotted line is the body, the highest body close, yeah, and lowest body close is the lower dotted line, okay, from this indicator. You can mark all of these out manually. Pending the time, I'm going to publish the indicator to TradingView. Okay, so the idea is that when price closes below a TR candle, the algo will not allow it to close above it. Okay, so like we have here, close below it, came exactly from the body of the TR candle. Now, the levels that will reject price, I've outlined it here. The body, the lowest body close, the middle, the highest body close, and the opening price. Okay, so here the opening price, the middle, and the highest body close is offering resistance here. Okay, so when it closes below it, the algo will not allow it close above it. Close below it, the algo will not allow it close above it. Reject. Okay, so this is time reference candle. In case I wonder what TR candle is, this is time reference candle. This is a reference in time that the algo is working with. Okay, so when the TR candle falls, basically the algo is programmed to protect it. So this is one of the macros that the algo runs on. Okay, there are lots of macros which I will be covering in the algorithmic video series. Okay, I'm still trying to compile the series together, structure them, and very soon I'm going to drop them on YouTube. It's a completely free video or a completely free course that I would be exposing a lot more things. Okay, once you go through it, you'll be able to know when there is liquidity sweep, when there is break of structure, which other block to use, when another block is low probability, and all of that. Okay, so you can also see from here, whichever area it breaks out, that should tells you what the trend is going to be. Okay, you can also see this TR candle here that formed here, close below it, rally, algo did not allow it close above it. See that crazy rejection. The same way this candle closed below it, rally to the midline, exactly at the midline. Look at how the bodies of the candle respected the middle of the TR candle. Okay, so close down below it, rallies into it, rejection. Okay, now there are exceptions to this. There are times when it will close above and still close below. When you see that, that is how you know when the market is about to enter into a seek and destroy price action, or if it is already in a seek and destroy price action. So this price action we have here, where it closed above it and also closed below it, is a typical seek and destroy. Okay, that is how you know. Some of the seek and destroy price action analysis I've been able to do and call beforehand on some of my outlook video. This is what I was looking at. Okay, intraday. Okay, when we go to the intraday TR candles, you will see some of these examples as well. Now, when it closes above it and closes below it, the high of the TR candle and or the highest high it forms becomes a draw on liquidity. Okay, I hope that is clear. When price closes above a TR candle and also close below it, the high of the TR candle, which is this level, and or the highest high it forms before this invalidation becomes a draw on liquidity. The price will eventually find its way there, and see how price came all the way up to that level. Okay, likewise, we have here, if it closes below it and closes above it, the low of the TR candle and or the lowest low it forms before that invalidation would be a draw on liquidity. That is, the algo will draw price to that low. Okay, you can see from here, see all this reaction. See how all this reaction to the middle of this TR candle before it gave way. Okay, so lots and lots and lots and lots and of examples. You can see from here how the bodies of the TR candle respected, how the bodies of this um candle respected the low of the TR candle. Okay, even before it's we got confirmation. So your confirmation is a close above or below it. If it closes above it, then the TR candle, the opening price, you can see from here it dropped to the high of the TR candle and the opening price, and then we see that reaction. Closes above it, fails to close below it. Closes above it, fails to close below it. So multiple examples here. Close below it, look at that rejection. Okay. So this in itself can be used for bias. You can use this for daily bias. Okay. Can see multiple examples. Close below it here, rallies, rejection. So lot of examples. Obviously, there are instances when it should close above it and also close below it, but generally, the rule of thumb is that when a TR candle forms, if price is bullish, and price closes above the TR candle, it will not allow it close below it. Okay, and there are also ways to know when um this is a daily time frame, by the way. This is the daily TR candle, but they are best visualized on the 4 hour or 1 hour time frame. Okay. Now, there are ways you can know in which direction it is going to break out, and there are ways you can also know even beforehand if it is going to be a fake out, like if it is going to be a fake TR candle where it closes below and above it. There are ways you can know that as well. Okay, from general analysis ICT concepts. Okay, so that is that on the daily. Let's For the daily, there are three TR candle on the daily time frame, but here I am only showing you one. The algo uses different ones based on different conditions. Okay, but most of the time, like 70% of the time, the one that the algo will use is the one I'm showing you. Okay, so in the algorithmic video series, I'm going to show you the remaining two, the other two TR candle for the daily time frame. Okay, so let's go to the intraday TR candle. Let me turn up the daily TR candle. Okay, so if price closes below, the algo will not allow it close above it. If it closes above it, that means there's going to be a secondary strike. So you can see price has dropped down, took out this low. So if you see this, for example, if you see this price close below and close above, would you want to take a long from here or from this other block? No. Okay, because immediately we got this close, that makes this low a draw on liquidity. So you know that the algo is likely going to draw down to it. Okay, here we have a close above, so you should use this as support to continue to the upside. So I can show you lots and lots and lots and lot of examples. Okay, once you get a close below it, it will not allow the algo to close back above it. That is rule of thumb. So if you close above it here, you can take a long and use this place as your stop loss and be able to catch this entire move. Okay, TR candle, close below it, close above it, this low becomes a draw on liquidity, as you can see from here. Okay, fair value gap, TR candle here, close below it, rallies using the body this time around as a rejection, drops. TR candle, close below it, rally back up to test this TR candle. So let's look at this rally here. Look at this TR candle. Let me get rid of this. Okay, look at the trial candle, close below it, rallies up. Look at that quick rejection. See how quick price rejected from the trial candle and pushed it down when bearish. This is what you want to see in a bearish situation. This is a down close candle, price failed to go above it, rejection. Now, there are times that I fade it. Maybe I do my analysis and I feel like, okay, maybe price should go up. I always regret it. Okay. Whenever I fail to follow the other flow of this TR candle, I usually regret it. Okay, because eventually it plays out pretty much all the time. There are times when it will close below and above it, but 75% of the time, once it closes below it, the algo will not allow it close above it. Okay, this is one of the macros that the algo runs on. Okay, likewise, you see here, we have a TR candle here, price came all the way down. Look at that dynamic price action. Like I said, when price closes below and above the TR candle, this low becomes a draw on liquidity. And see how price has come back down to that low. So this can use this as confluence, or you can even use it as a trading model. Okay, wait for a TR candle to form, wait for price to close above or below it, wait for price to return into the range, take a short or a long and place your stop loss above or below the high of the TR candle. Okay, so likewise we have here is a TR candle. Here price is not. So when you see this, you know that you can see from here it closed below it, but uses all of it as liquidity. Here it closed above it, came back to it, rally. Closed above it, came back into it here, rally. Despite the fact that GU is in a seek and destroy program, I can still see it holding TR candle. When it closes above it and closes below it, that high becomes a draw on liquidity. You can see how the market went back up to take out that high and reject. So there are many other information that this TR candle can give you, okay, which I would cover in future videos, particularly in the algorithmic video series. Okay, and there are a lot of other things I'll be teaching around it, how to use the TR candle to project the daily highs and lows, and how you can use to determine the weekly highs and lows, how you can use to determine high probability order blocks, high probability fair value gap, knowing when a fair value gap is going to remain open, knowing when an order block is going to be used as liquidity, knowing when there is break of structure and when there is liquidity sweep, differentiating between the two, and a lot of other things in the algorithmic video series. I will also be covering how to effectively, how to successfully and correctly trade the PD arrays, fair value gaps, breaker gap, breakaway gap, rather breaker, other blocks, how to correctly use them. Okay, based on other things that I realized, observed in time from price action. Okay, so if you also check EU, you see that it works on all asset class, guys. It works on every asset class. You can see close below it, rallies into the middle, rejects, came back again, rejects, close below it, rallies into it, rejects, close below it, rallies into it, rejects, close above it, came into it, rally, close above it. So you should expect a rally. Okay, so it works on all asset class. Okay, close below it here, rallies into it, rejects. Obviously, this is a fake one that didn't play out. This is not 100%, okay? This is not a 100% rule, okay? Close above it, close below it here. So this is one of those times, and this is during a high impact news event. Now, this, let me quickly say this only works best when there is no high impact news event. On days without high impact, particularly all these FOMC, NFP, CPI, high impact news event, this does not work, okay, because high impact news event does not respect, they are manually controlled, okay, they are manually manipulated. Okay, the algo is manually manipulated during high impact news events, so it is unlikely not to most likely not hold. That's what I'm trying to say. Look at this one, close below it, rallies into the opening price, rejects. Close below it, rallies into the middle, rejects. Close below it, rallies into the middle, rejects. Close below this one, rallies into the middle, rejects. Close below here, rallies into the body here, the, the highest body close, rejects. Close above it, came into the body, rally. Okay, so if you go back, you can test run it. I am going to give you now there are 6 intraday TR candles. There are 6 intraday TR candles. Okay, 6. You can see this is Monday. This is Monday. Um, let me. This is the end of Monday. Inside every daily candle, there are 6 TR candles. 1, 2, 3, 4, 5. 5 or 6. Yeah, there are 6. Okay, but I'm only showing 5 here. The 6th one is dynamic. Okay, that one requires some calculation. The algo typically uses when there is time distortion. When there is time distortion, or when it is in consolidation, when it is in a seek and destroy program, there is one other TR candle that the algo uses, which you know I might not cover. Okay, I might not cover. Sometimes when you discover something, you don't have to share everything, right? But maybe I will. I'm very generous. Maybe I will in the algorithmic video series. Okay, that 6th one is the one that the algo typically uses in a seek and destroy program. Okay, so once you find the range inside of that seek and destroy program, it will not allow it close above. It can rally above it, but it will not allow it close above. So, but let me give you the time range for the 5. I think I'm generous enough. I'm giving you 5 out of 6. So that is good enough. So the first one is the first 1 hour of New York session. So the important ones, the most important, they have different significance. Okay, they have different significance. They have different levels of significance, different levels of importance. Let me put it that way. Okay, so I'm going to tell you the ones that are most important first and foremost. The most important one is the first 1 hour of every trading session. Okay, the first 1 hour of every trading session, and by trading session, I'm referring to the um, Asia session, New York session, London session, and for the equities, you are looking at the AM session, the PM session, and the CME open. Okay, so the first 1 hour. Now, how did I discover this? Okay, I shared some video on my Telegram channel where you know some articles about the importance of the first 1 hour of every trading session. So that first 1 hour between 3 to 4 o'clock, that is the first range. Okay, that is the London TR candle. Okay, 3 to 4 o'clock, that is the first range. The second one is between 8 to 9 o'clock. That is the first 1 hour of New York session. Okay. The next one is from 9:30 to 10:30. That is the AM session for equities. Okay. For US equities, that is the AM session. That is the AM TR candle. So we have the London TR candle, the New York TR candle, the AM session TR candle, the AM TR candle, 1 to 2 p.m. That is the PM TR candle, and this last TR candle is between 7 to 8 p.m. That is the aftermarket TR candle like this, or you can just call it the Asia TR candle. Okay, this is at the end of the session, that range that forms between 7 to 8 p.m. Okay, that is the TR candle. Market will typically respect them. Once market closes below it, the algo will not want to allow it close above it until it takes out liquidity. Okay, so there are many other things you can, there are many other important informations you can get from the TR candle. For example, you can use to project the daily highs and lows, the weekly highs and lows, even monthly highs and lows, yearly highs and lows. Okay, you can use to determine the price action for the year even before it pans out. Okay, so in the algorithmic video series, I'll go over the weekly, the daily, the monthly, and the yearly TR candle. I'll go into it in more details. Right. So if you have any question, feel free to drop them in the comment section, or um, drop them in my on my Telegram channel. I'll be happy to answer them. I hope you found this useful. I will see you in the next video.